Let's move on to thing number 3, which is Zillow and what it tells us about what's going on in the housing market. And I think there are two things at work here. There's sort of what's going on in the housing market, and then there's what's going on at Zillow, of course. And so there is the problem with the housing market, and what this seems to signal about demand going forward with mortgage rates rising to a new high. So the company says its internet media and technology segment, which is basically its main business, is going to have $134 million to $160 million in EBITDA in the second quarter. And that shows that the usual spring selling season perhaps is not going to be as robust as predicted. So that's thing number 1. Thing number 2, which is Zillow specific, of course, is its home flipping business. Mm-hmm. And Zillow seems to have been guilty of some pretty lousy market timing in this respect. By exiting the business when it did, it wasn't working out for it because its competitors continue to do pretty well. The ones that are focused on that, when you talk about Open Door, for example, it came out with results and beat estimates. So Zillow, there's the housing market and then there's Zillow.
Well, I've said this before, and I'll just re-up it. I'm already all in it. I don't know how CEO Rich Barton is still leading this company. It was his decision to get into this home flipping business, and now they've continued to wind down these houses. The results of the core listing business, those are under pressure. And then, guys, he drops this comment on the earnings call, which is not just a major red flag for Zillow, but I think all folks that are investing in housing more broadly. Says, quote, total consumer transaction value growth trends are meaningfully softening, which is really a major red flag for the state of the U.S. housing market when it comes from Zillow.
I mean, me particularly looking at rentals here in this most recent report, too, you saw a decline there year over year of about 5%. And it also comes back to how much pressure rentals are facing in this housing market, not only because you had some of those pandemic deals that were getting taken off the table, but the number of people that are not getting into the houses that they were bidding on as well and got tired of that process that are now being swept back into the rental market. That should be a prime opportunity for Zillow. For them to see a decline in that particular segment, I mean, that's a red flag right now.
One more thing I want to mention. I mentioned Open Door. I want to mention Redfin also, because that company also came out with its earnings after the close of trading as well. That company had a smaller loss per share than estimated. However, it also predicted revenue for this current quarter of below analyst estimates. So,
look at that chart.
Yeah, well, I mean, that's only an 11% decline. If you put that up against a lot of other charts, it doesn't look so bad,
it's
does
just
it?
the whole week, weakness in these consumer-focused tech names, Etsy, eBay, Redfin, Zillow, just continues.